Oliver, are indicators necessary for trading the market well? And if they are, what are the best indicators? Can I trade well without indicators? All right. Most of your questions fall around that. Now, I'm going to give you some points to think about here. Do you need indicators to trade? Do they help you trade better? The quick and dirty answer is no, you don't need them to trade well. And in many cases, indicators can impede you from trading well. That's the quick and dirty answer. Let me give you some points here. Those of you who've been following me for a while, you know my pedigree in this space. I started trading the markets in 1981. I started my professional trading career on Wall Street in 1986. 1994, started my own institutional firm, leaving Wall Street to serve other Wall Street firms in 1994. All of you know that. Gone on to train, educate, speak all over the world, thousands upon thousands of traders. I will tell you that I have over my 4 decades of trading experience. I've done the work for you. I've done the investigation. I've done the investigative work for you. I've done the studying for you. I've done the trial and error processes for you. I've done all the testing, backwards, forwards, every which way but loose. And I'm telling you that there is no indicator that I have not explored to the stars and back, that I've not spent a fortune trying to prove whether or not they are useful or not, they have efficacy or not. During my period of searching for the Holy Grail, which is something that all of us go through, I hung my hat on every single virtual indicator you could possibly think of. And the conclusion that I ultimately came up with is that they actually do me a disservice more than they provide a benefit. Now, I'm not here to say that they have zero value in your trading. What I am here to say is that the balance between some of the negatives that they present and the positives are not even. The negatives outweigh the positives, relying on indicators for your decision making and trading. Now, I'm going to give you a couple points I want you to think about here, all right? Not only, here's why. Let me tell you why. Indicators, number one, write this down if you like. Indicators only indicate. The part of the problem is rooted right in the name of the actual item, people. Indicators are designed to indicate. So they are not the truth. They try to indicate what is the truth. So they, in a sense, deflect your attention away from the actual thing that you should be paying the most attention to, the truth. What's the truth in the market? Price. Everything else is non-truth. Price is the truth in the market, period. Your ideas are not the truth about the market. Your thoughts about the price is not the truth. Your feelings about the price is not the truth. The price is the truth. And indicators are designed to indicate something about the truth. So you have the truth and something that indicates about the truth. Now, your focus should be on the truth. But the indicator says, I have something to say about the truth, so you look at the indicator. You have left the truth. You are paying more attention to something that indicates something about the truth when you already have the truth. Indications of something are when you don't have it. A map is an indication of a specific location. You're going to a location that you're not in yet. The map is showing you that location. The map is indicating something about the truth, that specific location. But once you have the location, you don't need the map. When you have the truth, you don't need an indication of the truth. Truth is the only thing you need. In the market, price is the truth. I don't need something to tell me about what I already have. I already have the truth. Now, if I didn't have the price, I would need you to tell me something about the price. Give me an indication of where it is. Give me an indication how it is. How is the truth? What color is it? This and that. Those are indications of the truth that I don't have. But when I have the truth, I don't need a representation of the truth. I don't need a representative of the truth. I've already got the boss. So price is the supreme thing. The indication of the price is a second layer, and it's a second inferior layer to the price itself. So that's reason number one. It's a representative of the truth, and I already have the actual thing. I don't need a second-hand representative. Number one. Number two, all right? Indicators, they are, write this down, they are lagging in nature. All of them. They have to be. They are late, always. Indicators that are designed to specifically give you a reading, let's say overbought, oversold, or to give you a trigger, crossing is a buy, up, crossing down, this line is a sell, so forth and so on. These notifications are always late because of one main thing. The truth, the price must move big first to move your indicator. I want you to think about this, people. Think about what I'm saying. In order to move an indicator up big, or in order to have two indicators cross, the price must move in one direction big enough to then drag the indicator up or to drag the indicator down. So price moves first, indicator moves second. You're already late. Who wants to be in second? I don't teach you to be second. I teach you to be first. Your indicator is always second or third. It's always late. And the methods and the approach that I teach you here, right here on this YouTube channel, and it's certainly if you're in my family, you really get the deep inside knowledge. You know that my approach is to catch the ignition of a move, not wait for the move to then move something else, then act. It's too late for my traders and me. So I want you to think about that chain reaction, right? Price must move first to then, second, move an indicator big enough to cause a signal that then you act. You're in third place. Price, indicator, you, third place. That's enough to be a consistent loser forever, being third. Do you understand that order? Price must move big first to then move an indicator, and then you act. You're in third place. I'm not finished though. Reason number three. So remember, reason number one, indicators are representatives of the truth, and we already have the truth. I don't need the representative. They can only indicate something about the truth, and I don't need second-hand knowledge. I've got the truth. I've got price. Price is the truth. That's number one. Number two, they're late. Price must move big first to then move an indicator. After the indicator moves, then you act. You're in third place using indicators. Okay? Reason number 3. Okay? They are only relative, indicators are only relative to a specific time. Now, this is a problem inherent in a lot of things, but I'll tell you how you should be aware of this problem as it relates to indicators. Time. So every indicator needs a unit of time. So if you're using a MACD, it might be, you're using 9, 12, 14. You're using units. If you're using a CCI, you might be using a 5 period or a 3 period or a 9 period. If you're using a moving average, you might be using a 20 period or a 200 period or a 100 period or a 50 period. You've got to have that unit, right? That unit locks the indicator in one specific time zone, which means that it's indicating only in a small window. But reality is bigger than this small window. You might need some information outside of this limited little box that your indicator is based on. Okay? And this often leads, because indicators can only indicate within a small box, and reality is bigger than the box. This leads many indicator-based traders to have different versions of the same indicator. So if they have an indicator called my favorite overbought, oversold indicator, they'll have a 3 period, a 2 period, a 1 period, a 5 period, a 9 period, a 14 period, and a 21 period, and a 50 period, and maybe even a 200 period just to throw on. And all of a sudden, they've got a freaking trading screen that is more dominated by squiggly lines going up and down and moving signals, and they've left and abandoned the truth altogether, price. I see it all the time. I look at a trader's screen and I can tell how bad the trader is as a trader by how full his trading screen is of trading indicators. That dude is distracted away from the truth, further and further away from the truth. He's got more indicators on the chart than the chart itself. He is being pulled in 50 different directions, and all of those directions are designed to take attention away from the only thing that counts, price. Listen, you can't make money by an indicator going up or down, but you can make money by the price going up and down. So where do you think your attention should be? On the thing that you can't make money from going up and down? Or should you just put 100% of the attention on the actual thing that makes you money going up and down? The indicator is a marketing tool to say, don't pay attention to the price, pay attention to me. I will tell you what to do. And I will tell you this, guys, I have seen far too many traders to count, thousands and thousands, who are now in the trading cemetery because of their over-reliance on bullshit indicators. And all of these trading systems you see out there with a price on it, our trading signals have 98% accuracy. Our signals, all that shit is just indicators. It's indicators, which I'm all telling you, it will do more harm to your trading progress than focusing on what the truth is. The trader who trades based on the truth, based on the price activity itself, they are always the superior traders. They are always better, always sharper, always more consistent, always more accurate, always more timely, and always more profitable than an indicator-based trader. Of all the indicators out there, my favorite are moving averages. And they have a tremendous number of faults. You guys know, if you follow my work, I tell you right here, you do not look at a chart without the 20-period simple moving average on it. I don't care what time frame it is. You do not look at a chart without the 200-period moving averages, no matter what time it is. You're a silly 1 minute trader, 1 minute chart trader, fine. 2 minute and 200. You trade the 2 minute, okay, fine. 2 minute chart, 20-period moving average, 200-period moving average. You trade the 5 minute, okay. 20-period moving average on that, 200-period moving average on that. You trade the daily, fine. 20-period moving average on that, 200. It doesn't matter. Doesn't matter the market, doesn't matter the time frame. You are going to permanently look at price through the 20 and the 200. So if you follow my work for any period of time, you understand this. So I am not saying zero indicator use. I want you to understand the frailties of being too heavily indicator dependent in your trading. We use the 20 and the 200 period moving average and basically nothing else. But these indicators, the moving average indicators, the moving averages, they are best as trending indicators. They're better used generally as a guide for what the trend is. And that's one use. There's one other use. Location. Trend. So is the 20 pointing up? We're in an uptrend. Is the 20 drifting downward at a 45-degree angle? We're in a downtrend. Is the 20 wavy? We're in a sideways trend. Simple. That's one of its only general focuses. Is the 20 rising at a 45-degree angle? You're in an uptrend. Dips are viable. Is the 20-period moving average declining at a 45-degree angle or more, or more or less? Yes. Okay, you're in a downtrend. Rallies should not be believed. Shortable. All right, is the 20-period moving average wavy and relatively flat? Yes. All right, you're in a sideways trend. Are those waves tight? Are those waves wide and whippy? All of those things come into play. But generally speaking, moving averages are best used to do that. To quickly to quickly give you a visual picture, up, down, or sideways. The second most valuable thing that moving averages, as my favorite indicators, deliver is helping you understand the power of location in the market. Many of you know this already. In the real estate market, we know that the three main rules to making money in real estate is location, location, location. Well, that's not very different in the equity or the stock trading market either. The location of your buyable or sellable events matters. In fact, location can matter more than the event itself. If you get a buy event in the wrong location, the buy event is less important. You get that buy event in the right location. Wow, you get a buy event at a rising 20-period moving average. That is better by orders of magnitude than a buy event nowhere in the middle of empty space. If you get a buy event at a flat 200, wow, that is better by orders of magnitude than a buy event in empty space, near nothing. Do you understand? So those are the two main pluses. Those are the two main characteristics that are very positive that moving averages deliver, and that is why I use them. I use them for direction, up, down, sideways. I use them for state as well. And I forgot that. I use them for state. So when the 20 and 200 are tight, that's a narrow state. When they're wide, it's a wide state. We need to be good state readers. And I also use them as location items. Three things. With that being said, Outside of those three things, they are freaking horrible. They suck. Do you understand? Outside of being a state reader, is the 20 and the 200 narrow, close together? Is it wide? Is the 20-period moving average rising, falling, flat? Is my event at the 20 or at the 200? Outside of that, my goodness, they're horrible. Use them for anything else and they suck. You understand? They're just not good outside of that. And so that is my take on indicators. And I decided to kind of do my brief monologue on that, not so brief, but my monologue on this, because this talk should attack like 150 questions that I get on this. You will only see me and my traders use the price, events, the 20 and the 200. That's it. We don't need anything else. Everything else is a distraction. And even those moving averages suck outside of the three ways that we use them. Become master price readers, guys. Price is the truth. Do you understand this? Price is the truth, not some man-made indicator.